Alright everyone, here we are with another video with the Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. I'll ask for returns for you guys to smash that like button, and if it's your first time here, do not forget to hit that subscribe button and click on that notification bell so you don't miss a single video and you're up to date on our chart analysis here with 42 Vision. So we have the SPY pulled up. We're gonna talk about what's making the market run higher and also what happened multiple times this week and what makes this run different from the others, guys. And we're going to look at different articles as well. But before we break it all down, I want to share with you guys the home run opportunity I mentioned this morning, as well as the home run opportunity our SPY bot sent out this morning over at the Discord. So the home runs of the day were spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts with our 42 Vision indicators, check out the link down below in the description to the Discord and getting connected to our 42 Vision indicators and becoming part of a growing community of investors all looking to learn and grow together. So these are the two stocks I mentioned this morning. Both of them gave jumps of 3 to 5% and 5 to 10% plus, but one of them turned out to be a home run, and that was EVTL. Caught this one in the pre-market, sitting sideways and pulling downwards towards the bell, and then it continued to consolidate until it got that strength on 42 Vision with that bull indicator. Full strength on 42 Vision here, and it gave a highest point of possibility of 70% plus, guys. And not only that, but we also had our SPY bot sent out a bull indicator at 8:40 a.m. and from that moment forward, strength continued in the chart towards the bell, and even after the bell, and call options went up at their highest point of possibility, 200% plus within an hour, guys. If you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts, check out the link down below in the description to the Discord, getting connected to our 42 Vision indicators as well as our bots, and we strive for opportunities like these every single day. We look forward to having you join us. Let's jump into these charts. So here we are with the SPY, and you can see that it's done a complete transition from the dip area to the rip area, and we hit dip areas multiple times this week, and every time I tried reversing, it was a pretty weak turnaround, right? You could see it right there, and it always rejected and brought itself right back down. Now today's was a complete transition from yesterday to today, and what happened? What made it go up? We're going to look at those articles together. But before we break that down, I'm going to pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 Vision indicator, getting connected to the SPY bot, our QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. So here we are with the SPY. It was under a bear indicator yesterday, going into this dip area, started the transitions back up, and in yesterday's video we talked about how it erased all those losses and almost broke even sideways, right? It got that bull indicator, and I stated I was going to watch if it could continue the transitions into rip areas, and especially if it broke above 381 and how it reacted at 385. And here we are. Right now it's sitting under a bull indicator, trying to show some strength here, and right now it's hit a full rip area, going from yesterday to today, from this level of 374 to 385. Now, what made it run yesterday in this whole entire run that happened, and what made it continue today? This is very important to understand this, because I've stated this before in many of my videos. I believe volatility is going to continue, not financial advice, my perspective and opinion alone. The volatility is here to stay, and within these moves, I'm going to try to maximize within the volatility using 42 Vision to see the dips from the rips, as well as those bull and bear indicators that are there as extra layers of confirmation to maximize on the moves, right? So why did it run yesterday? Well, the first thing is, we have here the Fed Governor Waller expects 0.7 percentage point hike, but open to a larger one. So first he comes out and states, hey, I'm expecting 0.75. You know, the markets are actually pricing in 100 basis points. I'm open to it, but I think we're getting ahead of ourselves. You can see it right there. It says it right there. Instead of reading the whole entire article, the main concept here is Waller said the market is getting ahead of itself. He's open to it if it's necessary, but he's expecting 0.75. Why are we going all the way down where we're at? Why are we not bouncing back up? Stop pricing in 100 basis points because 75 is what we have planned and always had planned, right? But we're open to 100 if we need to. That's where things started to run, right? So he's talked the markets out of this dip, literally, because it actually turned out to be lower than Jim Cramer's notorious prediction, right? He stated that the 13th was the bottom. Well, the next day it went a little bit lower. Turns out right now he's looking like he's right, because even though he was off by a few dollars, we're going back up here, right? Now, when you zoom out though, that 372 mark was a very important support level. I talked about it in my videos, and it still is a very important support level. If we break through it significantly and cannot get back above it, we got back above it yesterday, and here we are today going higher. So yesterday was Waller. Today, what made it go higher? Well, has to do with this reading that came out on U.S. consumer sentiment. Unexpectedly shows modest improvement in July. So the expectation was 49.9, and it hit a record low, right, at 50, and it inched up now with the consumer sentiment at 51.1, guys. 51.1 was the new report showed, coming in higher than 50, coming in higher than 49.9, and this is a big move because it actually is now showing that all of a sudden, possibly, if consumer sentiment is getting slightly better, that means that CPI might get better, right? Or at least the economy is not looking as bad as people thought. That's what they do with this information. Now, could this be a real reading that actually can mean things are turning back around? No, it doesn't guarantee anything. It's the first step for it to happen, but it's going to take a lot more data, a lot more info, and how the Fed reacts to this information. So it created euphoria, it created hype, it created speculation, and here we are jumping from 78, right, 378 to highs here of 385. This is a very important level up here of resistance, 385.48, 385.50 if you want to round that up. Super, super important in this chart, and it's literally some of the highest points that we've seen throughout this week, guys, around 385. We definitely want to see the stocks go higher and SPY break above that, with them all together lifting and continuing with strength. Then the next levels will be up here at 390s and 393 range, as the history has shown here in the chart. But every time we get up here, there's a rejection that happens, and the stocks and usually the SPY hit a rip area. Okay, keep in mind, we're under a bull indicator since yesterday. We hit a dip area, and we're in bright green consecutively, and this is the rip area. Now, could it go higher for more days in rip area? Yeah, that's possible. Look at the history of the chart here, right? Hit that bull indicator as extra layer of confirmation, and 3 days of upward trend until it consolidated before coming back down. Now, does it guarantee it's going to do the same thing? No, nothing's guaranteed, but we do have the possibility. So it's going to be very important to watch at these resistance levels within the charts. Now, you could see here, right, when you zoom out and we look at the 1 day, that we're still under a bear indicator. This is the first time we pop out from these red bars back into red with green borders, but no bull indicator has popped up even when they've come up, even consecutively back to back here at the beginning of June. So we need to see a lot more strength in this. This is a pretty strong move from yesterday to today. We need to see what other news comes out next week that could possibly bring stocks higher, but it's still under a bear indicator on the 1 day since way back here at April 13th at around 444. When we go over to the 1 week, we could see here that this has been under a bear indicator since January 24th, and there's been multiple rejections and pulling it downward since way up here at 458. Right now we're at 385, and things are consolidating here, kind of sitting sideways after hitting its second dip area. Okay, super important. We're watching this carefully because we have tried to come back out of these areas, and then we go right back down to the next leg down. So every single time we've hit these rate hike dates, we tend to see on the week of or weeks later further weakness after it's been done. And that's what's been going on here. So when we zoom out though, we've actually looked at the 2020 drop, which actually lasted for several weeks, about a month. And then also the 2018 drop that lasted for almost 2 months. Now, in both of these times, we got wire Fred borders consecutively back to back 2 times in a row in 2018 and 3 on 2020. Now, this time, it's been a little different, right? A lot of volatility back and forth. Probably people buying the dip thinking that's the dip, or seeing prices that are good, brings things back up. Then reality sits in, brings it right back down. And we've hit 2 wire Fred borders very far from each other, right? Almost 3 bars away from each other, and right now we're on our 4th bar away from the next one, if there's gonna be another one in the next few weeks or months. We don't know, right? This could be the bottom, 362, who knows? But a lot of strategists and articles are stating this could go further down. So when we zoom out and we go all the way back to 07, 09, you could see how different things were. The drops were actually very slow, try to come back up, slow, right back up, slow, until finally it popped, right? That was 07 to 09. Now in 2000, same thing. It had its moments where it pulled back, hit dip areas, and brought itself back up. And only one bull indicator popped up around November of 01. Consolidation, couldn't break above resistance levels, and then things pulled right back down. Got another bear indicator, and it lasted for another several months. So very important to realize that these are not guarantees that things are going to look exactly like this, but it is important to look at them and remember them because they did last for several months to years, and this is the first time that we're in the middle of a correction that's lasted longer than a month or 2 or 3 months. We are going into 7 months, and if this continues and no bull indicator or real strength back up towards 400, 420, well, then this could go into 8 months or more. So this is why it's very important to be watching these levels, be aware of these things, and know the fake outs from the real breakouts, because right now, the momentum that we're seeing in the charts in the last 2 days, let's go ahead and look at this from a bigger picture perspective, but you could see the full transition here, is due to the fact on consumer sentiment improvement by a few points. We don't know if that's going to continue this way, or it's guaranteed. This is just the first reading to come out better. As you can see right here in the article, coming out better than 49 at 51 and above 50, guys. So super important to realize that's one part of it. And then we had one of the Fed members going ahead and stating that the market is getting ahead of itself. He's open and expects to 75 basis points, but if necessary, 100 basis points. Basically, trying to take people's mind and the market's mind off of a 100 basis point hike being a full effect, right? Or a full possibility, and stating that the markets are getting ahead of itself. So very interesting. And then when you come over here, it states here that the NASDAQ, the Dow, and the S&P 500 rise on Friday, but still down on the week with inflation, Fed, earnings on eye, right? So we also have earnings to come out in the next few weeks, and for possibly the next few months. Actually, we're in earnings season, so that's going to be important as well. Next week earnings and the following week. And then we have here at the end of this article, which is very interesting, the China slowdown and corporate results. This right here is also an indirect correlation to making our markets go up while theirs are hurting on the slowdown that they're going through. So all of this combination has made this move here. And like I always state, not financial advice, I personally believe volatility is here to stay. It will continue to be in the markets, and I'm going to continue to watch 42 Vision to maximize within the dip areas like it did in the previous time right down here, and within the volatility until it broke out and got that bull indicator as confirmation like it did right here again, and like it's done multiple other times way back here, and the full move here, and also on the way back down when it's actually maximizing from the bear indicator back down to those dip areas and full extreme weakness. So I'm going to continue to maximize within the moves. I don't think volatility is going anywhere. I'm going to continue to watch 42 Vision. We're getting really close to a key level here, up here at 385, 386. If that gets broken through, then 390, and above that is going to be 393 and then getting towards 400. That's to the upside. To the downside, the first support is 377 and below that is 372. I think 372 is a key support level to let us know if this is going to retest the lows that we've seen this year so far, the all-time lows in the big pullback for the last several months of 362, guys. I look forward to seeing your thoughts down below, and as always, thank you guys so much for watching, and let's make some money.